Donald Trump just dropped an economic bombshell that could reshape global trade. He's threatened 100% tariffs on BRICS nations, Brazil, Russia, India, China, and South Africa, if they continue pushing alternatives to the US dollar. The BRICS countries seeking to undermine the dollar is an unacceptable move, and it ends now, he declared on Truth Social, sending financial markets into a frenzy. This isn't just campaign talk, it's a direct response to a coalition that's building momentum to challenge decades of American dominance in global finance. Here's why this matters. For years, the US dollar has been the world's reserve currency, the backbone of international trade. This status has given America enormous advantages: low borrowing costs, control over sanctions, and a central role in the global economy. But BRICS nations are shaking that foundation. Collectively, they hold over 6,200 tons of gold, accounting for more than 21% of global reserves. This isn't just a stockpile, it's a strategic move to back their financial systems with something tangible, independent of the dollar. Russia alone holds over 2,340 tons, making it the bloc's leader in gold reserves. Between 2018 and 2024, Brazil's gold reserves tripled, reinforcing BRICS nations' collective strategy to diversify away from the dollar. The timing of Trump's warning isn't a coincidence. Just weeks ago, the BRICS bloc held its most ambitious meeting yet in Kazan, Russia, where they welcomed 13 new members, including Indonesia, Malaysia, and Turkey. This isn't just about expanding their roster, it's about shifting the balance of power in global trade. With their combined economies now representing over 31% of global GDP, BRICS is no longer a loose coalition. It's an economic powerhouse. The Kazan Declaration, adopted during this summit, emphasized the bloc's commitment to reducing dollar dominance and establishing a multipolar financial order. BRICS leaders tasked their finance ministers with exploring autonomous cross-border settlement systems to enable trade in local currencies, further challenging the dollar's supremacy. What's more, the bloc has been taking aggressive steps to reduce reliance on the dollar. China and Brazil have already started settling $150 billion in annual trade directly in their own currencies. This eliminates the dollar as a middleman, slashes costs, and gives them greater financial independence. The simplicity and cost-effectiveness of such arrangements have made them a model for other BRICS nations, fueling speculation about a broader adoption of similar agreements. It's not just a two-country experiment either. This could be a blueprint for others. Iran and Russia are another piece of the puzzle. By November 2024, they had fully integrated their banking systems, enabling direct transactions without relying on US-controlled networks like SWIFT. Iranian citizens can now use their local bank cards in Russia and vice versa, while over 100 banks from 13 countries are connected to this alternative network. It's not just about convenience, it's a deliberate strategy to bypass Western sanctions and strengthen financial ties. This collaboration also includes facilitating letters of credit, financial guarantees, and other banking services previously dependent on US-centric systems. The integration is seen as a significant step toward insulating BRICS economies from external pressures. India's trade with Russia showcases how quickly this shift can happen. In 2023, Russia became India's largest oil supplier, with many transactions settled in rupees instead of dollars. These deals aren't just about energy. They're a proof of concept for how major trade relationships can operate without touching the dollar. Even South Africa, the smallest BRICS economy, is settling increasing portions of its trade with China in yuan, demonstrating that smaller players can also benefit from this shift. South Africa's yuan-based transactions reached record levels in 2023, driven by its agreements with China to settle machinery and electronics imports directly in yuan. And then there's BRICS Pay, a decentralized payment system designed to cut the dollar out of cross-border transactions entirely. By integrating national networks like Russia's Mir and India's UPI, this platform allows seamless payments in local currencies. It's not just an idea, it's operational. And it's a serious challenge to US-controlled systems. BRICS Pay uses a decentralized star topology architecture, ensuring scalability, high-speed deployment, and resilience against economic sanctions. This system not only enables smoother transactions but also positions BRICS nations as leaders in innovative financial infrastructure. Trump's response to these developments has been characteristically blunt. Beyond the 100% tariff threat, his advisors are exploring additional penalties, like export restrictions, and labeling BRICS nations as currency manipulators. Trump has made it clear he's willing to use the full weight of U.S. economic power to protect the dollar's dominance. But there's a catch. By weaponizing access to the dollar, the U.S. might be pushing other nations to double down on alternatives. Think about it, if you keep threatening to kick people out of your club, you're practically encouraging them to start their own. And that's exactly what BRICS seems to be doing. The ripple effects of Trump's threats could be enormous. Doubling tariffs on BRICS imports would send prices soaring in the United States, from smartphones to soybeans. Inflation, already a concern, could skyrocket. And it's not just BRICS countries that would feel the impact. A manufacturer in Vietnam using Chinese components could find its products effectively shut out of the U.S. market, even though Vietnam isn't a BRICS member. That's how interconnected global trade has become. Energy markets are another critical factor. Russia's success in selling oil in non-dollar currencies sets a precedent that other producers could follow. If more major exporters start accepting payments in alternatives like yuan or gold, it could unravel the petrodollar system that has underpinned U.S. dominance since the 1970s. Meanwhile, the BRICS nations' growing gold reserves signal a long-term strategy to anchor their financial systems with real assets, creating a foundation for a potential future currency. This growing reliance on gold reflects a deliberate strategy to reduce vulnerabilities and promote monetary policy autonomy across BRICS nations. For American businesses, the stakes couldn't be higher. A 100% tariff on BRICS goods would force companies to rethink supply chains overnight. Finding new suppliers isn't just costly, it's often impossible in the short term. Small and medium-sized businesses in particular could struggle to adapt, facing either massive cost increases or outright shortages. The global tech industry is especially vulnerable. China's central role in tech supply chains means even products assembled in the United States-friendly countries might contain components that are effectively tariffed. For sectors like semiconductors, where supply chains are already stretched thin, this could be disastrous. These supply chain disruptions could ripple through industries, creating delays and shortages for consumers globally, not just in the US. The broader implications go beyond economics. As BRICS nations expand their financial independence, other countries are watching closely. Traditional United States allies like the EU and Japan face a difficult choice: align with American policies to defend the dollar or explore opportunities with BRICS to secure their own economic futures. The more fragmented the global financial system becomes, the more complicated these decisions will be. This isn't just about tariffs or trade, it's about the future of global finance. The dollar's dominance has been a cornerstone of United States power for decades. A serious challenge to that system represents nothing less than a seismic shift in global economic dynamics. Whether Trump's hardline approach strengthens the dollar's position or accelerates its decline, the stakes couldn't be higher. Trade and finance were built on interdependence, with the dollar acting as a shared foundation. But now, as nations carve out their own financial paths, we could be moving toward a future where economic alliances are defined by regional blocs rather than global networks. This raises a crucial question: is the world better off united under a single dominant currency, or should we embrace a multipolar system where no single nation holds all the cards? The answer to that question won't just be written in policy papers or summit declarations. It will unfold in the decisions made by businesses adjusting to new supply chains, by governments hedging their reserves in gold, and by consumers navigating the ripple effects of higher prices and shifting economic landscapes. Every trade deal signed in yuan, every new link in a BRICS-aligned banking system, and every tariff imposed by the US are chapters in this unfolding story. The next few years will be pivotal. If BRICS continues to gain traction, it could inspire other nations to join their efforts, accelerating de-dollarization. Conversely, if Trump's aggressive tactics succeed in isolating BRICS economically, it might buy the dollar more time at the top. Either way, the global economy is entering uncharted territory, and the decisions made now will echo for decades to come. As businesses, investors, and individuals, this is a moment to prepare. Diversifying financial strategies, staying informed, and anticipating these shifts will be key to navigating the uncertainties ahead. History shows us that major economic transformations don't happen overnight, but when they do, they redefine the rules of the game. This could very well be one of those moments. The real question now is whether the US and BRICS can find a way to coexist in this rapidly evolving financial landscape, or if this will escalate into a full-scale economic showdown that reshapes the future of global trade and power dynamics. One thing is certain: the world is watching, and the outcome of this confrontation will set the stage for a new era in international finance. Stay tuned as we continue to track these developments. Like, subscribe, and share your thoughts in the comments below. In a world of economic uncertainty, staying informed is your greatest asset.